Hey there, traders! Welcome back to 5 Daily Impulses. I'm Henry, and today we're diving straight into the action-packed world of the markets. Buckle up because we're about to break down the VIX Fear and Greed Index, the Market Analyzer, and the hottest news from ForexFactory. You know what I call these? Market movers. And trust me, you don't want to sleep on these when they start shaking things up. So, what's the VIX telling us today? It's currently at 16.39, up by 0.37%. And get this, the Fear and Greed Index is holding at a steady 66%. How's that for a market vibe? Stick with me, and let's ride this roller coaster together. First impulse, futures are down. U.S. stock futures dropped on Friday after a big jump on Wall Street, which was driven by a major interest rate cut from the Federal Reserve. This boost had brought the markets to record highs the day before. At 6:19 a.m., Dow futures were down by 32 points, 0.1%. S&P 500 futures fell 10 points, 0.2%, and NASDAQ 100 futures dropped 49 points, also 0.2%. On Thursday, the major Wall Street indexes rose after the Federal Reserve made a rare decision to cut interest rates by 50 basis points. This signaled the start of a new phase of easier borrowing. The S&P 500 gained 95 points, 1.7%. The NASDAQ Composite went up by 441 points, 2.5%, and the Dow Jones Industrial Average climbed 522 points, 1.3%. The market's excitement grew even more after reports showed that weekly jobless claims fell to the lowest point in 4 months. These numbers, which were better than economists expected, increased hopes that lower interest rates could reduce unemployment without causing more inflation. As a result, U.S. government bonds were sold off, pushing the 10-year Treasury yield higher. Right now, the fundamental news remains positive: lower inflation, steady growth, rate cuts, and strong corporate earnings. This should keep demand for stocks strong, analysts at Vital Knowledge said in a note to clients. Second impulse, central bank decisions in Asia. On Friday, the Bank of Japan decided to keep interest rates the same, just as everyone expected. They also gave a better outlook on consumer spending, showing they think Japan's economy will grow slowly but steadily. The bank kept its short-term interest rate at 0.25%, with all 9 board members agreeing. This decision matched what the market predicted, especially after the bank had already raised borrowing costs twice this year. However, the central bank warned that there is still a lot of uncertainty about Japan's economy and prices. They also mentioned that changes in currency markets could affect local prices more than before. Meanwhile, the People's Bank of China, PBOC, kept its closely watched loan interest rate steady, though many expect another cut soon due to China's recent economic struggles. The PBOC kept the 1-year rate at 3.35%, and the 5-year rate, which impacts mortgage rates, stayed at 3.85%. Third impulse, Nike's CEO steps down. Nike's stock went up in the last few hours of trading after the news that CEO John Donahoe will step down next month. Donahoe will be replaced by Elliott Hill, who has over 30 years of experience at Nike. Hill has held several leadership roles, including being the president of Nike's Consumer and Marketplace division from 2018 to 2020. He will take over on October 14th. In a statement, Donahoe said, "It became clear that now is the right time for a leadership change, and Elliott is the perfect person for the job. I'm excited to see Nike and Elliott's future successes." This news comes at a time when Nike has been losing market share due to competition from newer brands like On and Hoka. In June, Nike warned that sales of its top products were slowing, which caused a 20% drop in its stock price at that time. Wall Street analysts have been wondering if Donahoe, a former tech executive who led eBay and ServiceNow, was the right fit to lead a consumer brand like Nike. Fourth impulse, FedEx cuts its annual forecast. FedEx shares dropped sharply in late trading after the logistics giant lowered its full-year forecast and reported first-quarter earnings that fell far short of Wall Street's expectations. For fiscal year 2025, FedEx reduced its adjusted earnings per share, EPS, forecast to a range of $20 to $21, down from the previous estimate of $20 to $22. Now, they expect revenue growth for the year to be in the low single digits, compared to their earlier prediction of low to mid-single digits. FedEx reported adjusted earnings of $3.60 per diluted share, with revenues of $21.6 billion. Analysts surveyed by Capital IQ had expected earnings of $4.86 per share and revenues of $21.96 billion. One important part of FedEx, Federal Express, saw its profit margins drop to 5.2% in the first quarter, down from 7.1% last year. Fifth, impulse oil prices rise for second week in a row. Oil prices dipped a bit on Friday, but they are still heading for their second straight week of gains. A big interest rate cut in the U.S. helped ease some worries about a possible drop in demand. By 3:18 ET, Brent crude was down 0.4%, trading at $74.60 and 60 cents per barrel, while U.S. crude, WTI, slipped 0.3% to $70.93 per barrel. Oil prices have bounced back after hitting almost three-year lows on September 10th, with gains in 5 of the last 7 sessions. This week alone, prices rose over 4%. U.S. crude stockpiles in the world's largest oil producer fell to their lowest level in a year last week, according to official government data released earlier this week. However, the gains have been limited by ongoing concerns about slowing demand, especially in China, the world's biggest oil importer. Traders. Here are 5 important things you should keep an eye on today if you're aiming to make smart decisions. From U.S. inflation to updates from the Euro group, and of course the wild ride in crypto, these events could seriously impact the markets. I want to know what's on your radar, what's getting you excited or stressing you out in the market today. Let's chat about it. Happy trading. See you tomorrow, fam.